Having grown up here in Las Vegas and then selling real estate for the past 20 years, I remember when $1 million home looked like $1 million home. Now, $1 million home kind of looks like, well, a home. But the good news is that last week, the Federal Housing Finance Agency, more affectionately called the FHFA, raised the conforming loan limits to $800, $6,000, and $500, meaning you can now purchase $1 million home with 20% down and avoid taking out that jumbo loan. Additionally, with this increase for conforming loans, this means that FHA buyers can now take loans up to $524,225. That was a mouthful, which is calculated as 65% of the conforming loan limit. So with home values continuing to increase, it's good to see that the government gave us a 5.2% bump in this department to keep up. Now that we got the major news out of the way, let's dig into the data and see how last month's sales turned out. Let's have a property tour, shall we? Stock market just crashed and deuces. First up, let's see how November's sales stacked up. Last month, we sold 1,353 homes. Now, on one hand, this was a 12% increase over last November. But last November was the worst November for sales in well over a decade. So beating last year isn't exactly worth celebrating. To add some context to this, since 2012, we've averaged just under 2,200 sales in November. So from a historical standpoint, we're still down 38% from the norm. Now, with sales still sluggish, let's see what effect this had on median sales price. As you can see now, luckily the median price managed to remain unchanged at $475,000. This puts us up 6% over last year's median price in November. So think about it. In a year where sales are down about 40%, the market still managed to increase by 6%. Now, try and imagine what home values would look like once sales just come back to normal levels. Next, we have the missing piece of the puzzle, which explains why values have remained high despite the low sales: inventory levels. On the screen now, you can see that our inventory dipped slightly last month to settle in at just under 5,500 homes. While it's relatively normal for inventory to slip during the holidays, there's a more important perspective at play here. Even with sluggish sales, this gives us only a 4-month supply of homes. Now, if sales were to take off back just to normal tomorrow, we'd have just over 2 months supply of homes. Looking back at last year, inventory plummeted as sales increased. We lost inventory every single week until late June. Even in this year, we didn't start really increasing again until May. So this metric is going to be vital to watch as we jump into next year with, hopefully, lower interest rates triggering more buying power. Last but not least, let's check out housing absorption by price range. We look at this metric to determine how different price ranges are performing. The higher the percentage of homes under contract, the more competitive that price range is. First up is the bulk of our market, homes priced between $250,000 and $500,000. This remained unchanged at 31%. Next up are homes priced between $500,000 and $750,000. This increased marginally from 25% to 26%. Next, we have $750,000 to $1 million. This marginally increased as well from 21% to 22%. But let's talk luxury. Homes priced from $1 million to $1.5 million. This stayed flat at 19%. And finally, we have the ultra luxury market of homes priced over $1.5 million. This increased marginally from 13% to 14%. Now, the macro level takeaway here is this. While there are less homes available for sale and therefore slightly increased competition, I did notice that there's roughly 200 less homes under contract. So Potentially, December sales could amount to the worst December on record if we manage to sell 200 less homes than we did last month. Okay, now let's try to make a little sense out of all this madness. Sales are still terrible, prices seem flat for now, and inventory is holding steady but slightly down. As I've been saying for months now, November and December are the best times to get a deal on a home, especially if you're focused on family-style homes, since you tend to have much less competition in that category. Now, once we get into mid-January, not only do buyers start coming back out, but time is now on the seller's side. Every day we get closer to spring, the better it is for sellers. So if you're looking to buy, I would highly encourage you to try and find the right home now while there's little to no competition out there. If you're looking to list your home, just wait another month and gauge the market. There's a tremendous amount of uncertainty out there in the financial markets. Will Trump stick to his threat of tariffs, or is this just aggressive negotiating? Will the Feds lower rates or back off out of fear of inflation as a result of these tariffs? All of these unknown factors will ultimately dictate what happens to mortgage rates in the forthcoming months. Regardless of the end result, as a seller, you're most likely going to be in a more advantageous position over the next few months. Well, that's it for this month, everyone. Please be sure to like this video for the algorithm and share and subscribe. See you guys next week with another amazing property tour. Deuces.